Good morning, traders. This is Brad Matheny. Today's the 24th of July. Today, we are looking at our carryover Harami inside bar. And obviously, there's quite a bit of news. Just last weekend, we had the change in the presidential nominations with Biden resigning, the race to the White House. We had Google and Tesla data last night, which has moved the market. But generally, this pattern will carry on. We are in a carryover trend, bullish, and a warning trigger with a Harami inside, setting up a temporary bottom tomorrow, in a trend mode. I would urge you to consider that we are likely moving into a temporary bottom pattern today with the Tesla data. So maybe we are a little early with the Tesla data. The SPY is currently trading at 549.88 down in this lower area, filling this gap. So overnight, we've seen a very strong downward move. We've actually moved down to fill this gap, which is going to be important when you think about it. We have now closed this gap. We're holding just below this level. Let me get rid of some of these lines. And let's see, let's get rid of this one, and this one, because we still have the opportunity for basing and bottoming. And we still have this lower channel coming into play. So I'll leave that here, leave that here. We are looking at a Harami line. When you consider the range of yesterday, what will likely happen is we will likely see some sort of a push back upward. We're trading down in this area right now. And what will likely happen is we'll likely see some push back up just before the market opens, kind of into this area, and maybe seeing some range kind of like this over the day, meaning staying within this yesterday's type of range setup. So be aware that we're likely looking at something again, trading within the call it 552 to 556 area, and moving broadly to the upside, I would assume today, because I believe we've washed out all of these lows. So now, obviously, if we do open in this area, okay, in this 559, 49 and a half, or 540, 550 area, let's just say, try to get that out of my mouth this morning. We do have to pay very close attention to this deeper low down here. So again, pay attention to the fact that this 548 level, if we get below that 548 level, we're pushing to new lows. That would mean the market is now failing up in this area and moving down to a deeper low, which could still happen. Remember, these patterns are predictive. They're months and weeks in advance, and big news events can alter the way price moves in relationship to these patterns. So we have to be aware of the fact that big news, explosive news, can change the way the markets work. Seeing as though we are outside of this 550 area, just below this 550 area right now, we've been holding up fairly well. Like I said, this is a 30-minute chart. We'll come over here, take a look at the ES 30-minute. Look at how we've moved down since yesterday. Trying not to draw everywhere. And then we're just kind of building a base right here. So this was the post-market news, the gap as of yesterday. You can see 30 minutes, we've come back down to the lowest low areas that we've seen over the last couple of days. We're holding above support, this last level of critical support here. We really have a scenario here where these levels then still in play moving forward on the ES chart, and very possibly moving through early support, trying to get back up into this area, to go ahead and set up some sort of an upward move. So be aware that we could be looking at this as kind of a deep low bottoming type of formation in this area, which would play into the temporary bottom pattern setting up on the 25th. But we may be a little early in the sense that we may be setting up our temporary bottom here and then moving into hypothetical more of a rally mode into the following day. This is a good bottoming type of formation setup, especially after this data. Now, understand that the data, Tesla's data, Google's data was better, I guess, than Tesla's data. I was just watching the news this morning, and they're saying that sales had slipped and revenues. Basically, the economy has started to change over the last year, so it's not they're not able to sell the $90,000 cars anymore. They're down to probably 68,000 trying to sell their cars. But long and short of it, remember, these are two behemoths. These are companies that are still making, decent money. And it is a market of stocks, not a entire stock market. Something I learned a long time ago was it is, thousands and thousands of individual stocks trying to compete for your dollar. And so, even though something like Tesla moves into a slight downtrend, it is still not capable of driving the entire market down. It is still only, 1/1000th or less of the entire total stock market. So when you come right down to it and you look at the daily data, we're looking at this long, big recovery from October 2023. We're not even a year into that move yet. We're looking at a bit of a pullback over here, moving into the late stage Q2 2024 earnings, which means that we then have the summer months, which you can see over here. This is our summer months from last year, right back over here, the August, September rollover. That's still potential up here. But what it would be is it would be more of a rally up into this area, rolling potentially into this August, September timeframe before the election, and then rolling back into some post-election move. So we still have quite a ways to go, folks. And do I believe there's more downside risk? Based on the patterns, not much. So based on these patterns, I don't believe that there's much downside risk right now. Based on the data coming in, and it seems like the reactionary caution of traders, yeah, I mean, we could theoretically move back down to fill this gap right here, which would be a move to, call it on the SPY chart. That would probably be somewhere around. Let me go take a look at the SPY. So here's the gap on the SPY, and that would be roughly 536, roughly. So be aware that that gap, 536, could become a downside potential if this support level doesn't hold. We're right now into this lower support zone, holding above that lower support zone. And if it fails, that 536, 537.94 level becomes our target gap fill. So that would mean that we would be looking at potentially a downward trend of about 2%, maybe. I don't think it's really going to get there. I think it's going to roll back to the upside, just like the patterns predict. I think this data is come and gone, and we have a little bit of a reaction taking place based on the Tesla data, but I do not believe it is anything critical. Right now, the S&P is off 16%. NASDAQ is off 1.21%, looks like. And again, those are big numbers. So you've already got the 1.21 on the Nasdaq. Dow Jones has not moved much. It's like the dollar's moving a little bit higher. Let's go over and check the QQQ. QQQ is 75 down in this area, still closing in on that gap. Here's the gap we have to watch on the Nasdaq. Still, I don't believe it's going to get there, but just thought I'd give you a little heads up. That's the gap we have to watch on the NASDAQ. We're in pre-market right here at 475.33. So we are a bit lower, still above these lows, trading within this tight little range. Like I said, we're probably going to stay. I'm just getting rid of some of these lines. Okay, got it all cleared off for the most part. Get rid of this area. We're probably going to stay within this range. I mean, literally, we're opening pre-market down here. I think we're going to see it drift a bit higher, pre-market back into this area on anticipation, and then we're going to stay within this range today. Now, this is obviously daily, so I'm drawing this out a bit longer than it should be. But if I were to try to draw it more efficiently, we are down in this area here. I think we will drift a bit higher pre-market, maybe opening this 478 area, maybe a little higher, and then we will stay within this range throughout the day. Probably not getting much above 484 and probably trying to close above this gap here at pre-market. So 477.83 roughly or higher pre-market. So that's going to show us that we're going to be climbing from where we're at right now, probably up about 0.6%, maybe a little higher on the NASDAQ. And then we're going to just basically waffle around today. This is, like I told you guys earlier, this is a very solid, basing bottoming formation. So when you look at this type of a double bottoming formation, roughly in the same area, this is a very good indicator of the temporary bottom pattern setting up for the Thursday. So when you get right down to it here, folks, we may be looking at a move from this bottoming area up into this area over the next 2, 3, 4 days. So this could be a very early temporary bottom setup. I'm not saying that, it is, it's a day ahead. And it makes sense to me that if we're not going to see the Harami and we don't have any more carryover of the flat down, we move into these two bottoming areas. Remember, this is a top resistance and counter trend, which makes it a bottom support. We move into these two bottoming areas Thursday, Friday. And like I said, if we're looking at a double bottoming scenario here, it would make sense to me that we could see a resolution back to the upside later today, Thursday, and Friday. Okay, I'm going to go back to SPY. And what we're going to do is we're going to watch how this plays out today. Like I said, I really think that we've just closed this gap and we're now moving back to comfortable sideways zones. And we'll see how this plays out with the market. The shock is over. And I think we're now moving into a resettling of the market. So just pay attention as we play this out this morning. Okay, guys, talk later.